As the new year and economic recovery continues, investors may be wondering what the political and financial landscape for 2011 means for their investments. Here to talk about these issues is my next guest, John Mauldin, President and CEO of Millennium Wave Investments. Mr. Mauldin, can you discuss the policies to look out for 2011 with respect to investors' portfolios?
Well, I think the one thing that we've got a bull market in is complacency. I expect the U.S. economy to grow 2.5%, 3%. Things will do okay. The markets will, go up and down. So what we have to look at is what could, impact that view negatively. It's okay if it impacts it positively. You don't care if our stocks go up. The thing that I'm most worried about right now is sovereign debt in Europe. And specifically, I'm worried about the Irish elections. Because the Irish are basically going to say to Trichet and the EU, kiss off. We don't want to, guarantee the bank debt from Ireland to German and French and British banks, because that's 30% of their GDP. It's an untenable number for them. It can't be financed. And so if something can't be done, it's probably not going to happen. Well, that means that somebody's going to have to figure out how to take care of that debt that's on French and German and British banks at massive amounts of debt, hundreds of billions of dollars of debt. And for a while, that means that those banks are going to be technically insolvent. Will the EU act fast enough and quick enough to cover those banks? Then there's not a problem. If they start messing around and everybody starts finger pointing, you could have another debt crisis easily as problematic as the 2008 crisis, because our banks have sold those banks so many credit default swaps and so many derivatives that are not on an exchange. And if those, our banks say, we sell a swap here, we buy a swap there, it evens out on the books, so we're not at risk. Well, if you buy or sell something and your counterparty goes down, all of a sudden you are at risk. Nobody was at risk, and then, in 2008, then everybody was. And that same thing, I think, could happen again. And that's a problem that I think we have to pay attention to. The second thing I think we should look at is China. Central banks really aren't very good at managing soft landings. And they're trying to slow down their economy. They're trying to rein in their inflation. Their inflation's probably double what the official number is. I'm not at all 100% confident that the Chinese have somehow magically figured out central bank equations and can manage a soft landing. Maybe they can, and the world certainly hopes they do. But I think we should be watching, because that will be difficult on commodity prices, and all sorts of volatility.
And in the conference, you discussed the term debt supercycle. Can you further explain that point?
Individuals and companies have basically run up against their ability to limitlessly borrow money. Banks, what a surprise, actually want you to be able to pay something back if you borrow it now. Well, governments are running up against the end of their ability to borrow money all over the developed world. And it's not just Greece or Ireland, it's Spain, Portugal, it's Britain. Japan is a bug in search of a windshield. Japan is going to have a real crisis within the next year to year and a half. I think, it's going to start happening and it'll be a problem. As a country runs up against that limit and starts having to figure out how to do things and how to balance its budget, and it pulls back, that affects the whole entire economic structure for that country. And it affects their business environment and their investment environment. And so we're getting ready to go into, I think in the US, a slower growth, muddled through economy with uncharacteristically and uncomfortable high unemployment for a lot longer than we'd like to think. We have a lot of problems in this country. They're very, very serious. And we're going to start having to address them, or the bond market's going to jerk our chain, and we're going to have a crisis. Maybe not this year, maybe not next year, but soon.